Hi everyone, welcome back to Corporate Decoder. Today we are diving into Gulfport Energy's latest report where they might be trying to drill for good news, but we're here to see if they struck oil or just hit a dry well. This report covers Gulfport's performance and outlook as of May of this year. We will check how they're doing financially and operationally and what their plans are for the rest of the year. It is like reading their company diary, except it's a legal document. Before we dig in, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. Come join the discussion. First off, this is an 8K filing, a kind of quick update that companies send to the SEC when something important happens. In this case, it is their financial results for the first 3 months of the year. The date of the report and the earliest event reported is May 6, 2025. So everything we're discussing is as of that date. The filing highlights their financial and operating results for the first quarter of 2025. It also gives us a peek into their development plans and financial situation for the rest of the year. Think of it as a quarterly checkup for the company. Beyond the press release, Gulfport has also updated their investor presentation on their website. This presentation provides additional details. It is like a slideshow explaining everything in simpler terms for investors. Now, let's dive into the numbers from the press release itself. This is where we see how Gulfport is really performing beyond the company's optimistic spin. Here is the meat of the filing. Let's see how they are doing. I will mention a few numbers. Looking at their oil and condensate sales, they made $44 million from January to March. This is actual revenue, money coming in. Natural gas sales is their big money maker, making up $212 million in sales. Total revenues is a sum of everything. The company is at around $275 million. Okay, so they had $275 million in sales. Sounds great, but let's see the full picture, which means we need to look at expenses. The company has a net loss of $73 million. That's a pretty big loss for a single quarter. Adjusted EBITDA, which is amortization and exploration expenses, came out to 18.6 mediante 6 amount to $186 million. Adjusted EBITDA is usually the metric management and PR uses because it removes a lot of cost and paint a more positive picture of the company. On the spending side, their capital expenditures, which are investments in things like new equipment and property, totaled $107 million during the first quarter. That's a significant amount. Net cash provided by operating activities, the amount of cash they generated from their normal business activities, was $139 million. This is the money they brought in from selling energy. Finally, as of the end of March, Gulfport had $62 million in cash on hand. This is their safety net, the money they have available to cover expenses and invest in the future. Production. On average, Gulfport produced 1,139 million cubic feet equivalent per day during the first quarter. This is the total amount of gas and oil they pulled out of the ground, converted to a standard unit. Of that, about 8.1 thousand barrels per day was oil and condensate. These are the liquid hydrocarbons they sell. The bulk of their production was natural gas, averaging 1,091 million cubic feet per day. This is their primary product. Looking at how much they sold their products for, oil and condensate averaged 35 pen to 85 pen 85 per barrel. This is the price they received for each barrel of oil. Natural gas sold for an average of 2.51 cents per 1,000 cubic feet. This is a key metric for their profitability. Turning to what Gulfport expects for the rest of the year, they are projecting total production of 1,080 to 1,140 million cubic feet equivalent per day. This is their expected range of production for the entire year. They anticipate spending $425 to $475 million on capital expenditures. This is the amount they plan to invest in drilling and development. Finally, they are forecasting free cash flow of $275 million. Free cash flow is the cash they have left over after all expenses and investments. Now let's step back and consider what all of this means. Gulfport Energy is generating significant revenue from its natural gas and oil production. However, it is also incurring substantial expenses, resulting in a net loss for the first quarter. The company is investing heavily in its operations, as evidenced by its sizable capital expenditures. Despite the net loss, Gulfport is generating positive cash flow from its operations. It also anticipates solid free cash flow for the remainder of the year. One of the risks for this business, as with any energy company, is the price of gas and oil. So their performance is tied to the market. Also, they are spending quite a lot of money, but still not turning a profit. Hopefully things will turn around for them in the following quarter. Alright, that's our breakdown of Gulfport's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Let's chat more over there. Thanks for watching. See you next time.